Hello everybody and welcome to this edition of Inside Insurance. My name is Jean Ray. I'm a consulting partner here at KPMG and I'm your host for the series. Today we're going to have a special focus on global insurance trends, including some actuarial topics, and to do that I'm delighted to be joined by Laura Gray. Laura is KPMG's Global Head of Actuarial. She has over 25 years predominantly within the life insurance sector, and she provides services primarily in the life sector, focusing on financial reporting, regulatory compliance and helping clients with their modelling issues. So Laura, thanks a million for joining me. It's great to have you in Dublin.
It's great to be here, thank you.
Yeah, that's great, and I hope you're enjoying your trip.
Very much so, thank you.
Yeah, that's good. And I suppose you know the nature of the insurance business in Ireland is very much global. A lot of global players writing, I suppose, business on a cross-border basis. So I'd like really to start by just getting some of your views on some of the outlook and hot topics for the global insurance sector over the next while.
Yeah, absolutely. So I think when I think of and look at the global market right now, it's very segmented. And coming from the U.S. market itself, it seems to be very much driven by what are the capital regulations that are occurring across the globe. And how are those evolving in different regions? We certainly have seen in the U.S., for example, a pullback from European companies over the last 10 years after Solvency II coming in, a pullback from long duration business, which is more capital intensive, maybe a move toward shorter duration, simpler business. That seems to be a key theme in a lot of parts of the globe right now, is to simplify. How do we simplify products for the consumer? How do we get these products in the hands of our consumers more broadly and close the coverage gap? And what is the capital impact of doing that? So those are the simplification of products, the reduction of capital intensive business seem to be some of the bigger drivers I see across the globe.
Yeah,
right now.
Yeah, and regulatory simplification or divergence is obviously a key risk right
divergence.
now.
Yeah, that seems to be driving a lot of the activity is moving of the capital around the globe, trying to find the optimal place depending on the type of business that you're writing, and trying to direct the business to increase the yield. So after having been in a low interest rate environment for so long, the push to try to get higher yield. So that's the other key trend I would say is that we see more creativity, more different assets being invested in, more illiquid assets being invested in, trying to get a bit higher yield coming out of that very low interest rate environment that we had for many years too.
Yeah. We touched on, I suppose, regulatory divergence, obviously a key risk, and investing in, I suppose, more diverse asset types obviously drives greater risk. But there's, I suppose, a hugely uncertain and risky environment there at the moment. As actuaries, we always say that, but I think it's particularly true at the moment. And for example, the CRO's emerging risk radar would have touched on a number of emerging trends around demographics, I suppose social changes, climate, sustainability risks, technological advancements, geopolitical. There's a huge, I suppose, range of risks out there right now. I suppose, what, in your opinion, would be some of the most, I suppose, significant risks facing actuaries and insurance companies right now? And how can actuaries, I suppose, assist the industry in trying to address those as well?
Yeah. So one of them that comes to mind that I've been seeing a lot and I think is getting some heightened attention is policyholder behavior. And trying to understand the dynamics behind policyholder behavior when they have opportunity to exit or enter a product, pull their money out, when to put more money in, what is looking beyond what's happening in the insurance market, but within financial services more broadly, what opportunities do consumers have to place their money, and does that put the insurer at greater risk of higher withdrawals than they anticipate, and then the knock-on impacts of needing to think about liquidity and how that could impact. I think that's with the geopolitical environment that we have now and just more uncertainty. To me, that's a big risk for insurers right now. That is really understanding the possible knock-on impacts of policyholder behavior that they may not anticipate.
We can't, I suppose, not touch on AI and advancements in that regard as another, I suppose, macro topic. And I suppose we're seeing probably quite a lot of focus on modernisation of financial reporting and actuarial processes, particularly post, I suppose, IFRS 17 implementation for those IFRS reporters. And that can range, I suppose, from better efficiency through to reducing your model risk through to better insights for management, for example. I suppose what trends from a US perspective are you seeing in this space? I wonder, are you further ahead, and what should we expect to see over the next while?
I think we're still very much in the experimentation phase in the industry, and trying to figure out how best to leverage AI to do our work as actuaries better. I think opportunities to drive efficiency are at the top of the list, and how do we use it to get better information to make better decision making is the biggest opportunity. Clearly underwriting is a big opportunity as well, but that's still, given the more direct link to consumers, that's where we see the higher risk, and needing to be cognizant of what we need to do to be safe with AI, make sure that whatever processes that we're using AI for are keeping the customers safe first. So I think leveraging it for the back office function, that's the natural place to start. And then I think we'll start seeing it more where it actually has a more direct impact on consumers.
And you touched there around, I suppose, the consumer lens and kind of ethics around using AI and bigger data sets. I suppose just taking that a further step, I suppose, to remain relevant, I suppose, what skills do you see the profession, what skills would you see as being important for actuaries and insurance professionals of the future? For example, you touched on kind of that ethics and fairness point, but interested in your views so that we all remain relevant into the future.
Right. Well, I mean, actuaries have always had to have deep analytical skills, and that's not going to go away. But I think what makes us unique as professionals, distinguishes us from other technical professionals, is that ability to link that technical capability to understanding what does it mean for the business, and putting over that professionalism lens on top of it, because at the end of the day, a key role for us is keeping an eye on what is good for the consumers and protecting the long-term promises that insurers make to those consumers, so that we're a key part of that ecosystem, and making sure the whole system works safely for everyone.
Yeah, no, I agree. I don't think the analytical skills will go away. In fact, potentially they become more important as we have the greater ability to process, I suppose, bigger and deeper data sets, married with that ethical and fairness lens. But probably also communication will be a key, I think, skill and differentiator going forward as well.
Being able to explain the concepts to others, how are we thinking about it, analyzing it, and translating that into language that the general, the broader insurance community can understand, but even beyond the insurance community, to consumers and regulators more broadly.
Yeah, I agree. So AI, I suppose, is just one tool in the box. There's lots of other more advanced capability out there in tooling. And I suppose, what are you seeing in that respect in terms of more broader transformation?
Yeah, I think the insurance industry has probably underinvested for quite some time, and now we are seeing this wave, especially now that we are getting post-accounting change, post-IFRS 17, post-LDTI in the US, where now that some of these regulatory requirements have been met, how do we make these processes more efficient, more cost-effective, get better management information out of it? And so that's the big trend we're seeing right now, is how do we better leverage this information that we've spent the last several years creating to be able to provide useful information for decision making. We got to be able to do it faster. We got to be able to do it more efficiently, and drive that better information for decision making. So linking that investment in accounting change to new models, new processes that are faster and more controlled is where we see a lot of investment being made now, in cash flow generation, in the processes, in the data side. You get it. A lot of companies are very focused on getting more accurate data, better single source of truth that everybody can use, and self-serve that data, then feeding it into their models, and then on the back end trying to generate more useful management information that is not just used for reporting, but can also be single models that can then provide risk reporting, management reporting, and do it all more efficiently.
I think that's consistent with what we're seeing as well in terms of essentially that data strategy, in terms of getting the data together in a single source, accurate, complete, appropriate, the lineage throughout the process, and then ending up in not necessarily a PowerPoint report, but something like a dashboard that's a bit more user-friendly, bit more dynamic, and the whole, I suppose, workflow is automated. So consistent, I think, themes that we're seeing as well.
Yeah.
So as we've touched on a number of topics this morning, I suppose if there was one key thing for the audience to take away from today, I suppose what would that be?
I think it's around, we want to have a stronger economy for the globe. I think insurance is really critical, and continuing to be able to take insurance products to market is critical. So how do we as actuaries, what our role is as actuaries to help make that happen really is important, making sure that these products are available long-term, that the sustainability of the industry remains very strong. I think we want people to keep their eye on that at the end of the day, is what the industry is trying to deliver to society and to the people who are purchasing the insurance products.
Yep, agree, yeah. Well, thanks for joining us today. Delighted to have you here with us again, and thanks for taking the time out of your schedule to join us as well.
Appreciate it, great to be here.
Yeah. And thanks everybody for joining at home as well. As usual, I suppose if any of the topics resonated with you today, please feel free to reach out to myself, Laura, our usual KPMG contact. Thanks for joining us, and we look forward to seeing you again soon.